Today I'm going to look at 15 momentum-based ETFs, and I'm going to compare to see if they beat the indexes such as the S&P 500 or the NASDAQ 100 index or the indexes that they represent. So we've got 15 ETFs. They're all momentum-based. Momentum-based ETFs generally have a strategy where they buy stocks that have gone up in value at the greatest amount versus the index. So they buy while they're going up with hopes that it's going to continue to go up. This is the Vanguard US Momentum Factor ETF. It says here that they use a 1 month to 12 month time horizon, and then they compare month 1 to month 7, and they're basically selecting the highest returning ones and selecting those from the index. It pulls stocks from the Russell 3000 index. It has 654 stocks. Okay, so how well has the Vanguard Momentum ETF done? Now, the Vanguard US Momentum Factor ETF has a fairly low expense ratio of 0.13%, and it has a market cap of only about $649 million. It's not even $1 billion, so it doesn't have a whole lot invested. And it has 654 stocks that it's pulled from out of the Russell 3000, which has 2,981 stocks. Okay, so how well has it done? Okay, VFMO, the momentum-based ETF, is here in orange. The Russell 3000, this is the Vanguard Russell 3000 index, is in blue. So it started in 2018. If we look, it had a brief period where it actually did better than the Russell 3000. But we look all the way from the COVID spike in the stock prices. It actually, while the stocks were going up, that's when momentum stocks are supposed to do well, I think. It actually did worse than the Russell 3000. And then basically all the way through here, there's only one little brief period in 2021 where it did better than the Russell 3000. So you've got an index of roughly 3,000 stocks versus 600, and the 3,000 stock one did better. Even recently, all the way up from 2018 to currently, it only returned 121% versus 125% for the Russell 3000. So I would say that this is a failure as a strategy for this one. The next one we're going to look at is the Invesco Dorsey Wright Momentum ETF, ticker symbol PDP. This is one of the larger ones and the most expensive one. This one has 102 stocks and a very high 0.62% expense ratio. Here you can see total expense ratio 0.62%. Started 2007, 102 stocks. Now this one pulls stocks from the NASDAQ US Benchmark Index. I couldn't find any NASDAQ US Benchmark Index ETFs, so I'm going to use the NASDAQ Composite Index ETF from Fidelity. I'm going to use the Fidelity NASDAQ Composite Index ETF 1Q. 900. This one has 914 holdings. Okay, so how well has it done? PDP versus the NASDAQ Composite Index. Okay, we're going back all the way from the beginning, around 2007. If we look, 1Q as the NASDAQ Composite Index, we've got 102 stocks versus 914 with the NASDAQ. And as we can see, the NASDAQ basically blew it away. 352% at the end versus 788 for the NASDAQ Composite Index. So I would say this one is a fail. There was only one tiny brief period where I actually did better. If you like content like this, please like and subscribe. It really helps. The next one is the iShares MSCI US Momentum Factor ETF. This one has 123 stocks and a low 0.15% expense ratio. This one is also the largest with a market cap of about $9.7 billion, and it started in 2013. Composed of US large and mid-cap stocks, exhibiting higher price momentum. So let's see how this one did. Now I'm going to compare this one to the Vanguard S&P 500 VOO, which is in blue. The index it's hard to find the exact index to use, but I'm just going to use this one. So this one did very well. If we look at orange, the iShares Momentum Factor is in orange. We can see basically from 2015 it's outperformed all the way up until 2022. It's underperformed. It's been up and down since then, but there's been periods of time, most of the time, where it's outperformed the S&P 500. However, it still did not outperform the NASDAQ Composite Index, which is now in orange. So the NASDAQ Composite Index, which has 914 stocks, outperformed it. Okay, the last one in this group is the Invesco S&P 500 Momentum ETF. You may notice that a lot of these are Invesco. Invesco has a lot of these Momentum ETFs. SPMO is the ticker symbol. The index tracks the performance of stocks in the S&P 500 that have a high momentum score. They're rebalanced twice a year. That's the thing you'll notice. Most of these, they rebalance twice a year. This one has 101 stocks, a low. Most of these also don't have much of a dividend yield, so I'm not going to talk about the dividend yield because these are all super low. Also, the expense ratio is low at 0.13, 101 stocks, $3 billion in market cap. How did Invesco S&P 500 Momentum ETF compare to the Vanguard S&P 500 ETF? If we look at orange, the Momentum ETF is in orange, and as we can see, most of the time, it's done better than the S&P 500. And actually, this one is actually performed, I think, as it's supposed to perform. So as the market went up, it did pretty well. And then as the market went down, it lost its edge, like as you can see here. But now that the market's gone up again, it's outperformed the S&P 500. The S&P 500, this is the total return with dividends, 231% for the Vanguard S&P 500 ETF versus 303% for SPMO, the Invesco S&P 500 Momentum ETF. So pretty good for this one. Okay, so the next one, I've got two Russell 1000 ETFs. Okay, so the next group, we have two Russell 1000 ones. We've got the JPMorgan US Momentum Factor ETF, and we have the Spiders Russell 1000 Momentum Focus ETF. So JMOM and ONEO. So we've got 283 stocks for one, 913 stocks for the other. And they've got a 0.12% expense ratio, 0.20, 1.23 billion, and 125 million for the Spiders one. And 2015, 2017 were the start dates. So we're going to do JMOM. For the index on this one, I added the Vanguard Russell 1000 Growth Index, VOO, and JMOM is the in orange here. So how well did the JPMorgan US Momentum Factor ETF do? Well, to be fair, VOO was the second best performing Vanguard ETF. So VOO was the second best performing ETF for the 5 and 10 year for Vanguard. Only the VGT, the Vanguard Information Technology ETF, did better. So this is kind of a tough one to go up against. So if we look at this one, VOO has basically just blown this one away. So there's not a period of time, I think, where it actually did better than VOO. So I would say this one is a failure, but let's modify it a little bit and just add the regular Vanguard Russell 1000 ETF to be nicer to it. Now we're adding the regular Russell 1000 ETF. If we add the regular Russell 1000 ETF, it actually did better. I would say the JPMorgan US Momentum Factor ETF here in blue did better than the index most of the time. But in the end, they basically returned the same amount of money. And we've 142, I think, versus, it's about the same. But you've got 283 stocks versus 1,000. And the 1,000 still basically came up the same. So I would say this is sort of a fail still. Even though it won, I would say it's a fail because you've got 1,000 stocks to beat 283 stocks. And if we compare the better performing Vanguard Russell 1000 Growth ETF, VOO, which has a lower expense ratio, by the way, 0.08%. And guess how many stocks this one has? This one has 395 stocks. So it still has more stocks than the JPMorgan US Momentum Factor ETF. So with 395 stocks versus 283, I think the reason this one did so well is it invests heavily in tech with great percentages. So you see there's 10% in NVIDIA, 11% in Microsoft, 12% in Apple. I think that's the main reason for their success for this one. Okay, now let's look at the Spiders Russell 1000 Momentum Factor ETF. Okay, this one is the State Street SPDR, or Spiders, I guess if you want to call it that, Russell 1000 Momentum Focus ETF. This one has 127 million, so it's not the largest, a low 0.20% expense ratio. It has 913 stocks. This is a Russell 1000 Momentum Focus Index. It has 906 holdings. So how well does this do versus the regular Russell 1000 or the Russell 1000 Growth Index? Okay, so now we have the Spiders Russell 1000 Momentum Factor ETF. Now we have the ONEO, which is the Spiders Russell 1000 Momentum ETF. So that one is in blue. So the Momentum one is in blue. The regular Vanguard Russell 1000 Index is in orange. This is the basic one, not the growth one. So as we can see here, it was no match for the regular Vanguard Russell 1000 ETF. 140%, this is since 2016, 140% for the basic index versus 212 for this one. So I would say this Spiders Momentum ETF is a fail. And there's no point in me adding the growth one because it's going to be blown away with that one. For the Russell 1000 index, neither one of these have really done well, but JMOM did a little better. Okay, the next one I'm going to do, the next group are mid-cap ETFs. Now these don't have many stocks at all, 81 versus 132, so I think the results should be a little better. So we've got two Invesco ones and a Fidelity Momentum Factor ETF. Fees anywhere from 0.15 to 0.39%, and the market cap is 251 to 2.3 billion. So I'm just going to get right to it. Now this next one is supposed to be a momentum-based S&P Midcap 400 ETF. So I use the Invesco S&P Midcap 400 Pure Value ETF, RFV, as the benchmark. Okay, the Invesco S&P Midcap Value with Momentum ETF. This is our XMVF is the momentum-based ETF here in orange. The reference, the benchmark is in blue, RFV. This is basically a value mid-cap ETF. If we look, the Momentum ETF has underperformed the mid-cap value from Invesco. So basically their own benchmark has outperformed the Momentum one. So I would say this Momentum strategy is a failure for this one. 359% versus 428 for the benchmark. The next one in this mid-cap group is the Invesco S&P Mid-Cap Momentum ETF, XMMO. This one only has 77 stocks. We're going to use the Vanguard S&P Mid-Cap 400 ETF. We've got the Vanguard Mid-Cap ETF here in blue. That's the reference benchmark. And we have XMMO, the Invesco S&P Mid-Cap Momentum ETF with 77 stocks here in orange. If we look all the way back from 2012, it's basically underperformed the regular mid-cap Vanguard ETF all the way up until 2018, and then it's really taken off. So I'd say this is a little bit of a toss-up, but if we look at the recent performance, it's really spiked quite a bit. So it's actually done much better than the mid-cap ETF. So 399% for the benchmark, 659.08% for XMMO. Invesco S&P Midcap Momentum. And this only has 77 stocks, 2.3 billion market cap, and it's been around since 2005. So I would say this is one of the first few wins so far. This one did pretty well. Now this next one is from Fidelity. It's the Fidelity Momentum Factor ETF. And they're using their own index, so I don't really know what to use. So I'm going to use the Vanguard S&P 500 ETF. And this one has 132 stocks, so it should do better than the S&P 500 based on having fewer stocks. Generally, that seems to be the case. Now, the Fidelity one is in orange, and the Vanguard S&P 500 is in blue. And if we look pretty much the whole time, there may be just a couple little blips here where it did better. The Vanguard S&P 500 with 500 stocks beat the Fidelity fund, which has 132 stocks. So I would say this Fidelity one is also a failure. Okay, the next group I'm going to look at are small cap momentum ETFs. Can the small cap momentum ETFs beat the indexes? So we've got anywhere from 115 stocks up to 865 stocks. Now we've got a S&P 500 small cap index 600. We're going to use that one. We have the Vanguard Small Cap 600 Index, VIOO, here in blue. And we have the Invesco S&P Small Cap Momentum ETF here in orange. Now this one only has 115 stocks. As we can see in orange, the Invesco S&P Small Cap Momentum ETF underperformed the Vanguard S&P, basically underperformed the Vanguard S&P Small Cap 600 ETF. So I would say this one is a fail also. Now the next small cap is the Invesco S&P Small Cap Value with Momentum ETF, XSVM, versus the Vanguard Small Cap Value ETF. The Vanguard index is in blue. As you can see, most of the time the Vanguard index did better. It's only recently that XSVM did better than the index. So I'd say this is a bit of a toss-up, but I would say most of the time the regular Vanguard benchmark did better. So I'm going to probably give this one to Vanguard, and I'm going to say that this Momentum ETF was a failure. The next one is the iShares US Small Cap Equity Factor ETF, SMLF. It has a low 0.15% expense ratio, and this one has a large number of stocks. It has 865 stocks. It has 864 stocks, so I would guess that this is probably going to be one of the worst performing. And I'm going to compare this to the small cap index. All right, I was actually nice and I used the regular Vanguard small cap index, VB, not VBK, which is the growth one. So I wanted to be easy on the iShares ETF, so I just did the regular, not the growth. As you can see, the benchmark blew it away, all 463% versus the Momentum at 401%. So I would say this Momentum one is a failure. Just out of curiosity, let's see how many stocks. This one had 865 stocks. Let's see how many the VB has. Okay, here we have the Vanguard VB, Vanguard Small Cap ETF, 1,400 stocks. Wow. So 1,400 stocks beat one that had 865. So I would say this was a huge failure for the Momentum ETF. Okay, now, as you can see, I'm being very fair to the Momentum ETFs. I used the one that had 1,400 stocks. I could have picked one that had fewer stocks, like maybe the growth ETF. 463% for the benchmark. Let's see what happens when I change this to the growth one. Now, if we look at the growth one, look at the indexes. Instead of 462, it's 468% the benchmark performed. Look at this huge swing where it went way above the Momentum one. So much for Momentum on this one. The last one of the small caps is the Invesco Dorsey Wright Small Cap Momentum ETF. It has 201 stocks, a very high 0.6% expense ratio, and it's been around since 2012. Now I'm going to use the regular Vanguard Small Cap Index, which has 1,400 stocks, so you would think that would be pretty easy to beat, right? Because you've only got 200 stocks on this one. If we look here, the 1,400 stocks beat it up until around 2021. And then since then, the Dorsey Wright Small Cap Momentum has done better. It's only done about 20% better, so I would say it's a bit of a toss-up, but I'm going to give the win on this one to the Dorsey Wright ETF. So I'm going to say this one actually was, I think, the second one that did pretty well. So this is the only winner, I think, out of the small caps. Okay, the last two that I have, the last two are technology momentum ETFs. This one is the Invesco Dorsey Wright Technology Momentum ETF, PTF. It invests in the Dorsey Wright Technology Leaders Index, and it will invest 90% of its assets in the index. Now, this is only 30 stocks from the NASDAQ 100 benchmark index. So I don't have an ETF for the NASDAQ US benchmark index. So I'll probably use 1Q, which is the NASDAQ composite index that has 914 stocks instead. Okay, so the NASDAQ composite index, 1Q, is in blue. The Invesco Dorsey Wright Technology Momentum ETF is in orange. If we look, it's basically underperformed the whole time. There was only one brief period where it actually did better. So I would say this one is a fail. However, if we compare this to the Vanguard S&P 500 here in blue, I would say that the PTF did much better than the Vanguard S&P 500, but it didn't do as well as the NASDAQ Composite Index or QQQ. So it only had 30 stocks. The S&P 500 did 573% versus 816% for the Dorsey Wright Small Cap Momentum ETF. Now the last one that I have that I just added is one of the newest and smallest. It only has 11 million in market cap. It's the QQQA ProShares NASDAQ 100 Dorsey Wright Momentum ETF. Now this one only invests in 21 stocks out of the NASDAQ 100, basically QQQ. So it's looking at the highest performance from NASDAQ 100 QQQ and basically pulls out the strongest one. So that it's roughly 21 right now. And this one's only been around since May of 2021, so we don't have a whole lot to go on as far as history. If we look at the holdings now, it's got Constellation Energy, Meta, Netflix, Costco, Bookings. Those are the top holdings so far. Now, since this one uses the NASDAQ 100 to pull stocks from, I'm going to use QQQ for the benchmark. So that's going to be a tough one to beat. And it's only been around since 2021, so how well did it do? Well, actually, QQQ outperformed it the whole time. So 52% minus, the ProShares only did 5.11% versus 52 for QQQ. So once again, it's a fail for the Momentum ETF. All right, so putting them all together now, how well did they do? So I've got roughly, some of these are newer than others, but let's go back from the 2011 to start out with. Okay, so going back to roughly 2011, the S&P 500 did 550%, and this is with dividends included. It's still one of the best, it's still one of the better performers. There's only two that did better than the S&P 500. That's XMMO and PTF. So PTF was the technology one. So we're comparing a technology-based momentum to the S&P 500. So two totally different indexes. So this is not really fair. Of course, this is going to beat it, but this one did very well. PTF did very well, but we're comparing the wrong index. Now XMMO also did pretty well at 651%. PTF did 779%. And if we look at the white line, which is VOO, the S&P 500, there's roughly 3 above it most of the time. There was also one. Now, if you look above it, XMMO is really the only one that beat the S&P 500. This is the Invesco S&P 500 Mid-Cap Momentum, so not really the same index. And the one above it is PTF, which is the Invesco Dorsey Wright Technology Momentum ETF. So once again, not the same index. So we've got two totally different indexes beating the S&P 500. But out of all of these, you've seen most of them, well, you can't really count these yet, but most of these underperform the Vanguard S&P 500 index. And if we go back a little bit further, you'll see there's only maybe 3 above it most of the time. Now, there was another purple one here that kind of fell behind. This was the Invesco Dorsey Wright Small Cap Momentum. It fell behind, but most of the time, the S&P 500 did better than most of these. Now, let's change that. Before we give up on these here, there's a few here. Let's move the timeline up to, we're going to move the timeline to 2018. Now, if we move the timeline to 2018, it should be fair to the other ones. We still only have, we added one more, SPMO, which is the Invesco S&P 500 Momentum ETF. So this is the only one that's really relevant as far as trying to beat the S&P 500. At least it's an S&P 500 Momentum ETF. And this one was basically underperforming the S&P 500 until roughly 2024. So I would say it's not that much of a winner, but SPMO returned 155% versus 124% for the Vanguard S&P 500 ETF. Now, by the way, SPMO only has 77 stocks. PTF only has 36 stocks versus the S&P 500, which has about 500 stocks, plus or minus a couple. Let's add QQQ and see how well it compares against QQQ. Now we can see that QQQ did better than the Vanguard S&P 500 and did almost as well as PTF. And if we go back further, I think it shows even better. Let's go back 5 years. And now look, you can see that QQQ actually did better than PTF. And if we go back around 9 years, it did even better. So QQQ did better. PTF still did well, and here's another one. Let's add the mid-cap If we add the Russell 1000 Growth ETF from Vanguard, VONG, if we look at VONG here in blue, it did slightly below PTF, so it did pretty well also. It's not a momentum, it's not picking stocks based on them going up. So I think that momentum strategy doesn't work very well. These may actually be a fluke, but PTF did very good. I would say PTF did good, XMMO and SPMO. If we go back a little bit further and we look at PTF, the Dorsey Wright, if we look at the Invesco Dorsey Wright Technology Momentum ETF, PTF, if we go back and we shorten the time from 10 years to 5, so if we go 10 years instead of max, if we do 10 years instead of max, we do see that the Dorsey Wright Technology Momentum did much better. You can see some big spikes here. You can see some big spikes from 2020. And if we go back to 5 years, we shorten it to 5 years, you can see that a little better. So in the end, it seems to have returned about the same as QQQ, but there are a few little spikes. And if we do the 1 year, you can see that it's done pretty well. So the 1 year, it's 37% versus 31% for the QQQ. And when we compare one of the other winners, SPMO, which is the S&P 500 Momentum ETF, to the Vanguard S&P 500 ETF, we can see that huge spike here, and we can see this, but let's shorten it a little bit so we can see that a little more. So let's go to 10 years, and let's go to 5 years. You can see on the upward, there's quite a few little wins. So this one did better than the S&P 500 a little bit. 105 versus 137 for the 5 year. The other one that I liked was the Invesco S&P Mid-Cap Momentum ETF, XMMO. Now it only had roughly 80 securities. I think it was 77 securities. It says they have roughly 80. And it invests in the S&P Mid-Cap 400 Index. Yeah, they have 77 stocks. Okay, so let's compare this to 77 stocks versus the benchmark, which is the Vanguard VOO S&P Mid-Cap 400 ETF, which has 402 stocks. So first we have the S&P 500 compared to XMMO. XMMO actually beat the S&P 500 some of the time. It's underperformed most of the time. Let's just shorten it a little bit. We'll do the 5 year. Okay, so during the 5 year, it's a little bit more touch and go. It has spiked a little bit, but it's done pretty well considering that the S&P 500 isn't the index that it's supposed to do. So let's change this now to the mid-cap index. Here's the 1 year, just to see the 1 year for VOO. You can see since January, a lot of these have done pretty well since January. 47% versus 30% for the S&P 500. All right, now we've changed this from the S&P 500 to the mid-cap index, and I think it's done even better now. 399% for the mid-cap index versus 659% for XMMO, which is a mid-cap, the Invesco S&P Mid-Cap Momentum. And let's just shorten it a little bit. You can see most of the time it's done better than the mid-cap index. So this one is definitely a win, I think. Let's take a look at one of the winners, the Invesco Dorsey Wright Technology Momentum ETF, PTF ticker symbol. This one has a high 0.6% expense ratio, and it only has 36 holdings. The portfolio in this is a little bit different than a lot of them. The top holdings, it has AST, Space Mobile Inc., 9.6%, NVIDIA number 2, 5%, FICO, Fair Isaac, 4.8%, Arista Networks, 4%, Meta. So it looks a little different than most tech ETFs, which is quite unusual. And Microsoft's not near the top, which is unusual. Now, what's interesting about this is they're pulling these 30 stocks out of 2,000 stocks from the NASDAQ benchmark US, from the NASDAQ US benchmark index. So that's pretty good. I mean, some of those were like 900 out of 1,000, which is like not being very selective at all. This one's pulling 30 out of 2,000, so they're being more selective. What's also unusual about this is it has the highest portfolio turnover at 181%. Now, for an example, QQQ has a turnover of 22%. This is 181%. Now, what does this mean? Well, basically, it means that you're not going to have any qualified dividends. All of the dividends are going to be taxed as ordinary income. I looked through the Invesco ETFs. the qualified dividend, basically it's taxed at the capital gains rate, which is much lower than the ordinary income rate. And PTF was the only one that didn't have any qualified dividends. So basically 100% taxable as ordinary income, at least in 2023. But that's not a big deal because it really doesn't pay much of a dividend at all. If we look at the dividend yield for PTF, it was only 0.03%. So it's got a very tiny dividend. So that's going to be taxed as ordinary income, which isn't really a big deal since they don't pay much. So there you have it. That's my video. Please like this video if you liked it. It really helps the channel. And also subscribe if you haven't already. And I'll put some referral links in the description. Have a good one.